Imagine a world where global payments are instant, seamless, and costless, where currencies like the dollar, yen, and euro move effortlessly across borders on one unified system. That world is no longer a concept. It's happening right now, and Ripple is building the backbone of this revolution. With stablecoins, CBDCs, and groundbreaking technology, Ripple is transforming how the entire financial system works. If you think you understand finance today, think again. This is the future, and you don't want to miss it. Stablecoin discussions might sound repetitive, but what if I told you that they are the gateway to a massive financial revolution? You don't want to miss this. I get it. Hearing about stablecoins over and over again can feel exhausting. It's easy to dismiss them as just another buzzword. But here's the thing. Most people are missing the bigger picture. Right now, we are on the verge of witnessing a monumental shift in the financial world. The systems we've known for decades, those outdated paper-based processes that power banks, businesses, and even governments, are being completely realigned. And what's driving this change? Digital transformation. Everything is going online, and stablecoins are at the heart of this transformation. They're not just tokens, they represent the future of global finance. In today's video, we're going to break down exactly why stablecoins are so critical and how they're reshaping the entire financial ecosystem. Stick with us, because what you'll learn might just change the way you view money forever. Is the world ready for a fully digital financial system? I'll show you why stablecoins are the bridge to that reality. If you're serious about understanding the future of finance, don't forget to hit that subscribe button and join MMO Crypto as we explore these groundbreaking changes together. Let's get started. Imagine a world where every currency, every transaction, and every financial process happens instantly and digitally. That world isn't coming. It's already here. We're witnessing something massive right now, the rise of tokenization. The entire financial system, from fiat currencies to CBDCs, is moving on-chain. What does that mean? It means that traditional, slow, paper-based processes are becoming obsolete. Every major financial sector is being digitized, and at the center of this revolution are tokenization and central bank digital currencies, CBDCs. These technologies aren't just trends, they are the engines driving the next evolution of finance. And what's powering this transformation? Advanced solutions that streamline value transfers globally. In today's discussion, we'll uncover how tokenization and CBDCs are reshaping finance and why they are the backbone of the digital economy. If you think this is big, wait until we dive into the role of special drawing rights, SDRs, gold-backed systems, and how it all connects to the future of global trade. This isn't just about finance, it's about how the world moves money. Why are global economies betting on tokenized currencies? The answer will change how you see the financial system forever. Imagine a future where digital currencies are tied directly to major economies. Well, for the UK, that future is already taking shape, and the digital pound is leading the way. Let's get into it. The digital pound, or what many are referring to as RLGBP, is looking closer to reality than ever before. Recent developments have shown strong signals that this isn't just speculation anymore, it's essentially confirmed. Regulatory approvals are rolling in, and key players are starting to take notice. What makes this so significant? It's not just about creating another stable coin. It's about aligning with a much bigger picture of a digitized financial system. Stablecoins like RLUSD and now RLGBP are becoming essential building blocks for cross-border trade and value transfer. And here's the kicker. When you see institutions and organizations like the Digital Pound Foundation endorsing these moves, you know something huge is happening behind the scenes. This isn't just talk. This is real progress. The digital pound doesn't just sound nice. It represents a major step forward in connecting traditional currencies to the blockchain revolution. And this is only the beginning. The digital pound isn't just an idea, it's becoming reality. And it's setting the stage for a completely new era of global finance. Imagine a single solution that connects every currency in the world, making global trade faster, cheaper, and seamless. That's where blockchain-based SDRs come into play. There's a growing conversation about blockchain-based SDRs, and trust me, it's worth paying attention to. For those unfamiliar, SDRs, or special drawing rights, are a system led by the IMF. They act as a centralized bridge between the world's major currencies, creating a unified way to settle global financial transactions. In essence, they're an instrument of global financial governance. But here's where it gets interesting. When you bring blockchain technology into this equation, the entire concept gets redefined. A blockchain-based SDR wouldn't just facilitate currency connections. It could revolutionize liquidity and make cross-border settlements faster, more transparent, and more efficient. And what's at the center of this evolution? Blockchain solutions that are already capable of handling this vision. Some even point to advanced digital assets that act as a bridge, solutions that align perfectly with the description of a global liquidity tool. Could a blockchain-based SDR become the foundation for global finance? The pieces are already starting to come together. What if global payments could happen instantly, without relying on banks or slow intermediaries? The solution isn't just a concept anymore, it's becoming reality. Let's take a closer look at how blockchain technology is streamlining payments as we know them. There's an idea gaining traction, a blockchain-based settlement system that could enable payments using a digital e-currency, perhaps even a version of the special drawing rights, SDR. The concept is simple. Operators would only need access to the chosen e-currency, and transactions could then be recorded directly on the blockchain. In this setup, the process becomes almost entirely automated, cutting out traditional intermediaries like banks. Instead of multiple steps and delays, payments could move seamlessly, requiring approvals only at key checkpoints. Now, step back for a moment. This is exactly what certain technologies have been focused on for years, removing unnecessary intermediaries and enabling a truly frictionless payment ecosystem. And here's where the role of bridge currencies comes in. These digital assets are designed to facilitate value transfer between different currencies, acting as the universal link for global finance. Imagine a world where payments no longer hit bottlenecks caused by incompatible systems or slow settlement processes. That's the future being built right now. Instant, automated payments without banks slowing things down? This isn't a dream. It's the next stage of finance. Decentralized finance, DeFi, is revolutionizing the way we manage money. But have you ever wondered what makes it all possible? The answer lies in stablecoins. It's fascinating to realize just how central stablecoins are to the growth of decentralized finance, DeFi. At their core, stablecoins serve as key enablers for DeFi to function effectively. Without them, decentralized systems would struggle to deliver consistent and reliable value transfers. But here's the catch. For DeFi to truly thrive, it cannot rely on just one stablecoin. That's where the concept of a multi-stablecoin ecosystem comes into play. Picture this, a network designed to support multiple reserve currencies, USD, Euro, CNY, JPY, and GBP, all seamlessly transferring value. This setup ensures that DeFi protocols can function globally, without the limitations of volatility or single currency dependency. It's a game-changer for anyone using DeFi to swap assets, create yield, or power decentralized applications. Stablecoins are the fuel driving this transformation. They provide stability in a volatile market while enabling instant cross-border transactions, the kind of infrastructure that DeFi needs to scale worldwide. Why are stablecoins the backbone of DeFi? Because without them, the decentralized revolution wouldn't even get off the ground. Decentralized finance, DeFi, is growing fast. But here's something most people miss. Relying on one asset, or even one stablecoin, isn't enough to make DeFi work. Over time, the vision for DeFi has evolved. While digital assets are at the core of this revolution, it's become clear that stability is equally critical. Here's the challenge. If DeFi relies solely on volatile digital assets, it undermines the very system it's trying to build. At the same time, depending on a single stablecoin also creates centralization risks, defeating the purpose of permissionless, decentralized blockchains. That's why the idea of supporting multiple stablecoins has taken center stage. These stablecoins act as on-ramps and off-ramps, providing alternatives to volatility and ensuring the system remains functional, reliable, and truly decentralized. In a world where DeFi thrives, it's not about choosing one solution. It's about creating an ecosystem where various stablecoins can coexist, enabling users to move value securely and efficiently across global markets. This multi-stablecoin setup isn't just an option, it's a key enabler for DeFi to deliver on its promise of a borderless, permissionless financial future. DeFi can't rely on just one stablecoin. The future depends on diversity, and it's happening right now. Stablecoins are already driving DeFi, but did you know they're also becoming the foundation for global reserve currencies? Let's break it down. Stablecoins have become the growth engine for decentralized finance. Think about it. Whether you're swapping assets, trading, or generating yield through DeFi protocols, you're almost always interacting with a stablecoin along the way. But here's where things get even bigger. The focus isn't just on any stablecoin, it's on reserve-backed stable assets. Imagine key global currencies like the USD, Euro, JPY, GBP, and even CNY, all represented as tokenized reserve assets. This isn't speculation. It's the direction the financial world is moving toward. And while a single entity won't house every stablecoin globally, there's a clear push to focus on wholesale money, specifically reserve currencies. Here's where it gets interesting. Once these new stablecoins are fully integrated, we'll see systems like the ESDR, electronic special drawing rights, take shape. This structure allocates weight to each major currency, creating a digital basket that's globally interoperable. In short, these stablecoins aren't just tools for DeFi. They're the building blocks of a new global financial system that bridges reserve currencies seamlessly. Reserve-backed stablecoins are more than digital money. They're unlocking the next era of global finance. Here's how. Ripple isn't here to serve retail customers. They're building something much bigger, a financial backbone for the global wholesale market. Here's something many people misunderstand. Ripple's focus has never been on retail banking. Their vision lies in something far more significant: wholesale money and large-scale financial infrastructure. Despite speculation and debates, the facts are clear. Ripple has been working closely with major global organizations for years. Take the IMF, for example. Ripple's ties to the International Monetary Fund are undeniable, with private meetings and collaborative discussions shaping the future of finance. But let's clarify one key point. XRP is not an ESDR, electronic special drawing right. Instead, XRP functions as the bridge asset that facilitates seamless value transfer between global currencies. And while some assets are designed for peer-to-peer, P2P markets, Ripple's solutions are built to serve banks, institutions, and wholesale markets. Think of Ripple as a provider for the next generation of financial tools, where transactions are faster, cheaper, and fully optimized for a digital-first world. The shift is already underway. Ripple is positioning itself not just as a player, but as a cornerstone of this new financial infrastructure. Ripple's partnerships with global institutions aren't just for show. They're building the backbone of the wholesale financial system. Japan is setting the stage for a major shift in digital finance. Could stablecoins tied to the yen be next? Let's take a closer look. Right now, we're seeing a strong push for stablecoins globally, and Japan is no exception. While the current focus may be on launching USD-backed stablecoins, it's clear that demand for a yen-backed stablecoin is growing rapidly, and it's only a matter of time before it becomes a reality. Why is this important? Japan has already laid the groundwork. About a year ago, regulators in the country passed critical legislation to support the development and integration of stablecoins. As we speak, multiple companies are navigating the licensing process to bring these digital assets to life. What does this mean for the financial system? A yen-backed stablecoin could bridge traditional finance and blockchain technology, providing a stable, efficient solution for both domestic and international transactions. Japan's progress isn't just significant for its economy. It's a signal to the rest of the world that stablecoins tied to major reserve currencies are becoming inevitable. With regulations in place and companies lining up, Japan might be the next country to lead the charge with a yen-backed stablecoin. Imagine a single asset that holds the value of the world's strongest currencies. That's not a future concept, it's the SDR, and it's already in play. Let's talk about something critical to the global financial system: the SDR, or special drawing rights. Now, what exactly is it? The SDR is not a currency on its own. Instead, it's an international reserve asset, and its value is derived from a basket of 5 major currencies: the US dollar, euro, Chinese yuan, Japanese yen, and British pound sterling. This basket approach makes the SDR stable and globally significant, acting as a tool to balance and bridge value across economies. Here's why this matters. When we look at today's financial developments, digital assets, tokenization, and stablecoins, it forces us to rethink everything we've seen so far. Could the SDR play an even bigger role as finance becomes digital first? These are the kinds of questions that redefine how we look at the world's economic systems, and what comes next could be game-changing. 5 currencies, 1 global asset. The SDR could hold the key to a unified financial future. BRICS nations are building a new financial system powered by blockchain, and it could reshape global payments as we know them. One question keeps coming up. What about BRICS? These emerging economies, Brazil, Russia, India, China, and South Africa, are actively working to build a new payment system. Here's the key. This system relies on a basket of reserve currencies and leverages blockchain technology to consolidate liquidity into one seamless pool. Sound familiar? That's because this aligns perfectly with the concept of an ESDR, an electronic version of the special drawing rights. What makes this revolutionary? The ESDR, backed by reserve currencies, can serve as the bridge for cross-border payments. It eliminates friction, speeds up transactions, and reduces costs, all using the power of blockchain to tokenize and transfer value globally. If we piece everything together, this looks very similar to what some advanced blockchain networks are already working toward, creating a global liquidity solution that connects economies efficiently. The BRICS system isn't just about bypassing traditional financial structures, it's about building a modern, interoperable network that could redefine how countries move value across borders. Blockchain, liquidity, and a basket of currencies, the BRICS system could be the blueprint for the future of global payments. Imagine a digital asset that central banks could create instantly, with no cost, to solve global liquidity issues. That's the power of ESDR and tokenization. We're witnessing a major shift in how global liquidity can be managed. Central banks and financial institutions are exploring solutions that could transform international finance, and the concept of an ESDR is at the heart of it. Here's how it works. Today's financial systems are costly, complex, and inefficient, especially when it comes to managing collateral and liquidity. But with advancements like distributed ledger technology, DLT, central banks could issue a new form of SDR, a digital version known as the ESDR. Why is this significant? Because DLT tokenization allows for an instantaneous, costless creation of ESDRs. Unlike the traditional process, which is slow and expensive due to underdeveloped markets, this approach eliminates those barriers. The ESDR would serve as a multilateral financial solution, positioning central banks as the lender of last resort to manage global liquidity in a far more efficient and countercyclical way. In short, this isn't just a concept, it's a solution that could reshape the financial landscape and provide central bankers with the tools to stabilize economies in real time. Costless, instant, and globally efficient, the ESDR, powered by tokenization, could change how we solve global liquidity challenges. Central banks are racing to tokenize money, and one technology is leading the charge: a solution designed for instant automated settlements. The future of money is being rewritten, and tokenization is the key. From central bank digital currencies, CBDCs, to tokenized assets, we're witnessing the transformation of global finance in real time. Here's the critical point. While many players are exploring tokenization, one stands out for its unmatched progress with central banks: Ripple. No other technology in this space has established such extensive partnerships or driven real-world initiatives at this scale. Why does this matter? Because the world's payment systems are changing. The demand is clear. We need automated, digital, and near-instant settlements. The way to achieve this? Put everything on-chain. Tokenize CBDCs, assets, and even value itself to remove bottlenecks and inefficiencies. And here's where it connects to the bigger picture. Solutions like Ripple's are aligning perfectly with global trends, including the ESDR initiative. This push for tokenized liquidity and seamless settlement is laying the foundation for a new financial system that's faster, cheaper, and more efficient. Tokenized CBDCs are the future of global finance, and Ripple is at the center of making it happen. Cross-border payments are growing faster than ever, but they remain costly, slow, and inefficient. Is there a solution? ESDR innovation might just be the game changer. Here's something worth looking back on. In October 2019, the OMFIF outlined a groundbreaking idea: using a digital SDR, ESDR, to enhance global payment systems. The problem? Cross-border payments are plagued by inefficiencies. Growing demand from trade, foreign investments, and remittances has put immense pressure on outdated systems. Payments today are often slow, costly, and opaque, made worse by multiple intermediaries, varying regulatory standards, and complex operational requirements. On top of that, legacy systems and concentrated market structures only exacerbate these problems, creating bottlenecks and increasing costs. The ESDR, however, offers a transformative solution. By creating a composite digital token tied to a basket of major global currencies, the ESDR could streamline back-end processes, lower compliance costs, and provide a unified solution for efficient cross-border transactions. This isn't just innovation, it's a practical step toward solving a decades-old problem in the global financial system. Outdated systems are holding cross-border payments back. Could the ESDR finally deliver a faster, cost-efficient solution? Cross-border payments are broken, slow, costly, and outdated. But a digital ESDR could be the solution the world has been waiting for. When it comes to solving global payment inefficiencies, the idea of a digital composite asset, the ESDR, is emerging as a real game changer. What is it? The ESDR is built on the concept of the Special Drawing Rights (SDR), the International Monetary Fund's reserve asset, which ties its value to a basket of major global currencies. The goal? To facilitate seamless, low-cost cross-border payments that overcome the challenges of traditional systems. Interestingly, this concept traces back to 2017, when leaders from the IMF began discussing a digital version of the SDR. Around the same time, global financial institutions and central banks were already exploring new technologies to bring this vision to life. Here's the critical part. A digital ESDR doesn't just represent value. It could serve as the foundation for a unified payment system, reducing friction, improving speed, and enabling financial interoperability on a global scale. The IMF's openness to this change marks a shift in how institutions are thinking about the future of finance. A digital SDR isn't just a theoretical solution anymore, it's a practical answer to modern cross-border challenges. Could a digital ESDR finally fix cross-border payments? The idea is closer to reality than you might think. Imagine a future where central banks use a unified digital currency for seamless cross-border transactions. Ripple is quietly building the technology to make this happen. Why is this so significant? Because central banks around the world are exploring ways to simplify and streamline cross-border transactions. One of the most compelling ideas is the use of a digital ESDR, a universal digital token tied to the IMF's SDR currency composition. Here's what makes this powerful. An ESDR would be stable and free from volatility, trading speculation, or manipulation risks. Its value would remain tied to the most trusted currencies, making it an ideal solution for global liquidity and settlement. So where does Ripple come in? Ripple's technology is already deeply connected with central banks worldwide, providing the infrastructure they need to issue and operate these digital assets. And at the center of this system is XRP, the asset designed to act as a bridge currency, ensuring that all of these digital tokens and currencies are freely convertible and seamlessly exchanged. This is what XRP was always meant to do: enable efficient, frictionless value transfer across borders, becoming the backbone of a unified financial ecosystem. Ripple isn't just participating in this transformation, it's positioning itself as the global infrastructure powering the next era of finance. Ripple's role in cross-border finance goes far beyond payments. It's building the technology for a truly unified global system. Stablecoins, CBDCs, and the digital future are unfolding. But one technology is at the center of it all, driving the revolution forward. Let's uncover Ripple's key role. It all comes down to one thing: XRP's role as a bridge currency. This is where XRP's value truly shines, connecting currencies, enabling seamless transfers, and solving liquidity challenges on a global scale. But here's the bigger picture. Ripple and XRP go far beyond just bridging currencies. Their technology is also tied deeply to the rise of DeFi, tokenized assets, and the digital transformation of finance. Now, let's take a step back and think about stablecoins. Aren't they just CBDCs with a different name? The answer is essentially yes. It all depends on who the issuer is. Ripple, by actively pushing stablecoins and securing key regulatory approvals, is aligning itself perfectly with the central banks and institutions leading this change. This isn't speculation. Ripple is already working with major central banks and major players around the world. By focusing on stablecoins, CBDCs, and the broader financial infrastructure, Ripple has positioned itself as a key accelerator in this digital financial revolution. What does this mean for the future? It means Ripple isn't just participating, it's helping build the foundation for a more efficient, tokenized global financial system. Ripple's push for stablecoins and CBDCs is more than innovation. It's the blueprint for the future of global finance. The global financial system is being rebuilt from the ground up, and one technology is quietly becoming the backbone of it all. Let's take a step back and look at the bigger picture. We're witnessing the complete revolution of how the financial system operates. From stablecoins to central bank digital currencies, CBDCs, the push for tokenization is unstoppable, and it's reshaping global infrastructure in real time. One thing is clear: Ripple is playing a central role in this transformation. By working with central banks and introducing solutions that enable instant, seamless settlement, Ripple has positioned itself as the cornerstone of this new financial system. This isn't just about innovation, it's about creating an interoperable global solution that bridges traditional finance with the digital economy. And at the center of this revolution is XRP, the asset that facilitates the smooth flow of value across currencies, borders, and systems. Here's the bottom line: the changes we're seeing right now are historical. Ripple and XRP aren't just participating in this shift, they're helping lead it. For anyone holding XRP, understanding this moment is critical because its long-term value is tied directly to this transformation. Ripple isn't just part of the financial revolution, they're building the foundation for its future. If you found this breakdown valuable and want to stay updated on the future of digital finance, don't forget to subscribe to MMO Crypto. Join us as we explore the technologies and trends shaping the next era of global finance. Let's dive into the future together.